How's it going, guys? I promised to make analysis on Euro USD and also GBP USD. And as for synthetic indices, I won't make an analysis for it on this video, maybe some other time. And because I have a lot in my hands, I haven't really been looking at synthetic indices. So, what do we see? And first of all, take these three concepts, these three principles into consideration. I made several videos on structure and supply and demand on my YouTube channel, so you can check them out before you come back to watch this video if you have no idea about what I'm saying. So yeah, first of all, structure. What is structure telling you? On the daily time frame, because this is the daily time frame, the market has been bullish. See this bullish move, higher low, higher high, higher low, higher high, higher low, higher high, and this was the last point. So what are we waiting for structure wise? We are looking for this higher high to be taken out in the near future. And this is the daily time frame. Except you're a swing trader or a position trader, you can literally put your buys or your trade from here and put your stop at this point. You can literally do this if you're a swing trader and come back in the next 2 or 3 months and close your trade, or you don't have that type of money to be to be swing trading. So what we are going to do, we are going to refine our entry. So structure wise, that is what you can expect from Euro USD. And again, can literally fail and we shift our buyers from being bullish to bearishness. But that hasn't happened. That's why I like to wait for my confirmation entry, which is the Wyckoff schematic or inducement, any form of liquidation and price showing that he wants to go bullish. Yeah, I'll be waiting for that. So this is the daily time frame, and let's go down to preferably 2 hours. Okay. So supply and demand wise, what is price telling you? As you can see, chill, let's go back to the daily first. Let me make my points clearer on supply and demand. Okay. Yeah. So supply and demand, what is price telling you? You can see this was the last point. You see this week taking out the liquidity here. That means that's a sign of inducement, and smart money wanted to take price upwards. And you see he left out imbalance and inefficiency at this zone, created this demand zone. So we are looking to trade off this demand zone and look for buys upwards. Okay, let's return back to that 2 hour time frame. Um, on the 2 hour time frame, when price took out this low, I was now looking for sales back to that demand zone. That is counter trend. But for a long time, I didn't get an opportunity because the market was quite impulsive, moving downwards without any clear setup for me. It created this low, lower high, lower low, and I call this a displacement when you wick through. Remember, I said I use candle body breaks instead of wick breaks. And if you can remember, I posted a setup on this Telegram group where I took a trade. You can go back to the past history of this Telegram group. I took a trade from this zone where I marked out this liquidity pool, and I took a trade somewhere from here, a sell trade. I can remember clearly, yeah, it was here. I took a sell trade from this zone to take out the liquidity rested here. Why did I do that? When I was close to the demand zone, I knew that um price will likely head down because as you can see at this zone there was very clean break and it left out imbalances and inefficiency pricing at this point. One thing about imbalance is that price is attracted to them. It won't always feel them immediately, but at some point it comes back to feel those imbalances. Hence my decision for taking that trade at this point. And apart from that, I knew that this was a displacement and price wasn't ready to mark up yet until I see it feel this imbalance and tap into this whole demand zone. So I took a trade from there, understanding that it's a counter trend trade. I risked zero point 0.5 and I think I aimed for just 3 hours. And by the way, these circles are for swing points or structural points rather. Price created this leg, this low, retraced back to this zone where you could have found an entry to take. I honestly don't know why I didn't take this trade. Maybe I was too focused on AUD USD. That's one thing about looking at multiple trades. Sorry, multiple pairs because you miss out on some trades. And you could have gotten perfect opportunity to enter from here to sell it back down because price break structure here and retrace back gave another setup for you to trade it downwards. But I didn't take any trades from here, so I won't lie, I didn't take any trades from there. So now price has filled that imbalance. That imbalance is this purple rectangle I'm using, and I marked out the 50% of that imbalance. We filled that imbalance, then we started seeing price moving up a bit, and price took out this low also. I'm waiting for a bit of a retracement. This is what I'm waiting for on AUD USD. Sorry, Euro USD rather. Like making mistakes. But anyways, I'm waiting for it to pull back and break structure again. That is when I will be interested in taking trades on a Euro USD. Why? Because this can easily come back down. Because I use a rule called second break entry. Like that second, I'm not supposed to disclose it here, but I will still do it anyways. I don't know if you carry a mental grief. Alright. What do I call a second break entry? A second break entry is like a confirmation for me to be certain that price is ready to mark up, to move up, to be bullish. Because one thing about taking the first trade on the first break of structure is you can be faked out a lot and tricked a lot. So yeah, I'm waiting for market to pull back. Already it has broken structure here, but I'm waiting for a pullback and a second break of structure. That's why I call the second break entry rule. And when that happens, I will now find my entry at the demand zones left here and the markup. When that happens, I'll now find my entries at the demand zones or the M block left. Again, M block is a term that my private students understand. I don't want to share it on the free public group because obviously I'm not even supposed to be doing free analysis, but I'm trying to help people out. So yeah, waiting for that pullback and a break of structure, then another pullback to area of inefficiencies, imbalance, tap into my demand, give me another setup in the lower time frame. Because one thing about price is when you understand the fractality of price and how price is fractal and how price behaves across all time frame, you will have a better understanding of the market. So yeah, this is what I expect to happen. It might not happen, but when this happens, I can now throw my bag of money on the setup and wait for this ride upwards because it's going to be a solid buy. And I think this is the best time to be purchasing prop accounts because when the markets are trendy, that is when your age, that is when profitability and your overall bottom line will go up. So yeah, this is the analysis for Euro USD. Take a screenshot of this setup. It can appear in different forms and different ways, different variations. It doesn't have to really happen the way I'm drawing it. But one thing you have to know is that there has to be series of break of structures upwards for you to confirm that this market is ready to shift from this bearishness back to bullishness. And what do I call this whole thing happening? Your area of accumulation. I taught it in that white call video. When sellers will try to be involved at this point, they will still want to sell, but the sales are over. And what smart money and the composite man is going to do is engineer this point. So a lot of people will be liquidated based off they want to still sell. They don't know that at this zone they haven't looked back or looked to their left to look at this zone, that this is a demand zone imbalance here and price is willing to react off it. So yeah, that is for Euro USD. Let's go straight to GBP USD. Alright, let's go to the daily time frame. I know most of you don't trade NZD USD, that is New Zealand dollar USD, but it's looking very promising, and I'll be trading it in the coming months. I'm still getting the first time me actually wanting to trade it, but I've been analyzing it for some time now. So it's looking promising. I like trading trendy markets because obviously that's the best time to trade when the markets are trendy. So this GBP USD, what do we see on GBP USD? Basically the market has also been bullish for some time throughout December, and I saw this first break of structure where price come back to break the structure, and I was waiting for the second one to shift bullish. But I have been trading this GBP USD for a long time, since December, I think, yeah. Because as you see, price has been consolidating, and I don't like trading consolidating markets because you can't really predict where the market is going to go. There's no clear direction. So you getting involved in this whole point, some people are still trading it because they have different strategies, different rules, different criteria of entries. They are not me, I'm not them. So I won't be trading it. I haven't been trading it. And that's one thing you guys need to know. You don't need to be jumping around different strategies. Know what works for you and when your age plays out the most, when your strategy plays out the most. And I like to avoid consolidating markets because you can't really tell. But if the market takes out these two equal highs, move upwards, we can now see that this is a clear reaccumulation that happened. If this happens, yes, I said if, because I trade based off scenarios, not predicting. The best way to trade smart money is to react, not predict. So yeah, if this happens, then I'll be involved in GBP USD looking for buys. Maybe it breaks structure, pulls back, gives you that clean setup. Chill guys. Yeah, break structure upwards. It can go retrace deeper or not. You can't really tell, but you react to what happens. This is just like a blueprint of how I'm willing to enter. Yeah. So if this happens, takes out this high, I'll be looking for buys of this demand zone. And again, second scenario is literally this being a distribution instead of an accumulation because you don't know yet. If it breaks, then I'll be looking for sells. If it breaks, I'll be looking for sells at the supply zone created to take price back down. Because if you check on a weekly time frame, I hope you guys are following me because I'm trying to make this quick as possible. I want to sleep. I've been up all day. Yeah. So if it breaks this low, my bias will change from potentially being bullish to bearishness. But we all know GBP and Euro USD correlates a lot. So if I want to be bullish on Euro USD, then this GBP will likely be bullish too. So my bet is on it being bullish. But if anything happens differently, even on Euro USD, if it breaks that low or that demand zone fails, I'll shift my bias from being bullish to bearishness. I hope you guys understand, and I hope I've shared some knowledge on GBPUSD and Euro USD. I haven't been taking trades because it's consolidating. Some other people are taking trades, but they are not me. Their strategy might be the same, but they have different rules and different rules of entry. I like to avoid consolidating markets because anytime I'm trading in consolidating markets, even if I might win a trade once or twice, like I might break even that month or be at a minor loss that month. I don't really like trading consolidating markets. I'm speaking from experience. It hasn't worked for me that much. It affects my growth and my P&L. If I take trades or take a prop challenge around this period of consolidation, I will likely lose the challenge because there's no clear direction to where prices go into. So yeah, it's a quick one. I hope you've learned something out of it. Three simple concepts: structure, supply and demand, and Wyckoff. Honestly, is what you need. But technicals is not everything. Your psychology also matters, and we all know that. But once you have a clear, once you have a clear distinct set of rules to follow, it even helps your psychology the more. And your psychology gets better with experience. That's what I learned. You can't read a book and eventually your psychology is fixed. You have to go through those losses. You have to go through those tough time. You have to try it and see for yourself. See what works, what doesn't work, and you just try and error, and you get better. So yeah, it's a quick one. Have a good night, good afternoon. Whenever I post this video, peace out.